more on the markets, and we have Rohit Srivastava with us, founder of Strike Money Analytics and India Charts, to help us with the technicals as well as the stock-specific ideas on the markets in particular. Rohit, good afternoon. Thank you for giving your time to ET Now. Deeper cuts in broader markets as we see, but the benchmarks trying to hold on to the positions at important levels, though 24,800, that's a level which we still need to see. What's your view on the market all over?
I think we are seeing a knee-jerk reaction to the news flow. The markets were already down for most of July on the expectation that things could turn sour to some extent, or the uncertainty that what's really going to come out of this. Now that we've gone from uncertainty to some level of certainty, I think the worst case scenario is now discounted. Most of the key indices like the Nifty or the Midcap have actually tested the 17th June low from where the up move had really taken off. And I think that low is acting as a good support. So I don't think we'll fall below 24,600. We should slowly start to develop an upward trend from here and see the market slowly advanced to higher levels. That is what I would think will happen as more clarity comes in the next 2 days also. But for the day, I think it is going to just end in a knee-jerk reaction. Overall, the impact of all of this, I think, has already been fairly discussed to the extent that it's going to be very specific to stocks that have a excessive exposure to the US. Apart from that, I think the markets will continue to focus on domestic linked stories more than anything else, and that's where the gains will eventually come from.
That's the view coming in on the index level. I understand you can't talk stock specific, but FMCG sector is the only index that has been spared from the turmoil that we are seeing in the global market. Many of these domestically linked sectors have not been impacted in today's downtick. Your view on the entire FMCG space as a whole, and that perhaps the uptrend is likely to continue going forward, especially the outperformance as compared to other globally exposed sectors?
So FMCG is turning out to be the only defensive play because even you'd be scared that what happens to pharma in terms of the actions. He's already mentioned it a couple of times. And the other defensive sector used to always be IT, which again, nothing has really been said on services, but a lot of negative remarks were there, I think, a week or so ago in terms of US companies, not outsourcing too much. So we don't know how entire game plays out. I think that only leaves FMCG as a defense whenever there's a tougher market. Some money gets allocated to to the FMCG sector. But eventually, I think there's a lot of growth in individual mid and small caps that are domestically focused, and I think those sectors will attract attention and drive the next move up from here. And even if you look at the places like metals, for example. Metals is a lot of domestic, domestically focused segment, especially when you say steel. So even when global steel prices have been sort of down to flat for several months, we have seen steel take off much better. So that is the kind of thing we are really seeing. And I think it will help our markets do well over time.
Absolutely. Yeah, I believe consumption is the only sector which is fed completely, and at the same time, domestic players is something which we need to watch out for. However, textile is feeling the heat at present. Rohit, thank you so much for your views on the markets and giving us an idea on